Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a new week. Well, we got what we were hoping for last week. Well, we got what we were hoping for in the sense that we got an answer from the Fed, and now everybody knows the answer is a 0.25% interest rate increase on the Fed funds rate. That puts their target rate now at a 0.25% to 0.5%. But more interestingly were the comments that Jerome Powell made at the announcement of the rate increase. They're going to be doing subsequent rate increases throughout 2022 and maybe even a few into 2023. What that is purely an indication of is that this thing ran way too far for far too long and way too hot. Now having to deal with consumer inflation and producer inflation both being at all-time highs, this is a problem, and the Fed's only tool to combat it is their short-term interest rate. Now, at the same time, they're backing themselves out of their quantitative easing they've been doing for over a year and a half. They were buying $120 billion a month of treasuries and securities. Now, removing themselves from that means that they're handing back over to the open market all that responsibility, and that's going to come at a price. Right now, that price is being rippled through all the wholesale side of the industry, and then it's all coming to the consumer side. Anything that gets more expensive on the wholesale side eventually makes its way to the consumer side, and you see increased prices on shelves and increased gas prices as an example, but even things like wheat that makes bread and just normal stuff you buy at the store, you're gonna see inflation for the cost of the things you normally buy, or you're gonna see sizeflation, the same price, but for less product. So I think that is some of the function of what the Fed's trying to fight, but is it a little bit too little too late? A lot of people are saying yes, because you have all-time highs happening kind of everywhere, and there doesn't seem to be an end in sight. Every month that the producer price index increases, that eventually means that in 30, 60, 90, 120 days, the consumer is bound to be paying that higher price as well. So until that curbs and you see a flattening of the producer price index and a decline in the producer price index, we should not expect that consumer inflation is going to ease up anytime soon. And what that means for mortgage rates is they're just gonna go up. Now, mortgage rates have a whole different basket of money compared to the Fed funds short-term rate, but the opinion of the Fed weighs heavily on the mortgage-backed security market, which is where our money comes from. And this is where law and supply and demand comes back in. When there's scarcity and there's a little bit of money, it's more expensive to borrow. And when there's a ton of money and the mortgage market is flush with cash, rates go down and rates are super cheap. And that's what was happening for so long, is because the Fed was participating in the market, there was a lot of money available and it was very cheap to borrow for quite some time. But now that they're removing themselves from that, it's really just gonna be whatever the market puts into the mortgage-backed security that's gonna be available. So however much money is going in towards mortgage-backed securities will heavily weigh in on that interest rate that's associated, essentially due to scarcity. So what you should be doing right now, if you're aspiring to buy a home in 2022, you need to be thinking 60, 90, 120 days in advance. That means if you're trying to move this summer, you need to start your qualification right now. You need to get approved right now, and not just at today's rate, but even hedge a little bit and get approved for maybe 1/4 to 3/8 higher, maybe even 0.5% higher, if you're looking to buy in the summer, strictly because the market is gonna do its function as it's going to, and you're gonna be a bystander in that whenever it is time for you to finally buy, or whenever it actually materializes that you can buy based on low inventory and how long it takes to get one of your offers accepted. So what we're telling people right now is get approved at today's rate, but make sure you still qualify in 30, 60, 90 days at a future rate if rates go higher. Not that they will, but if they do, they might. If they do, you want to be prepared for that so you're not caught off guard and you're not squeezed out of the market 90 days from now. If you are a current homeowner and you have not yet tapped into your home equity to use some of that home equity that's been gained over the last 18, 24 months, do that now. There's no sense in waiting for tomorrow's higher rate when you could be qualifying for a cash out refinance right now, taking some money out of your house and applying it back into the house or paying off debt. You could be taking on that project you've been delaying. You could take on the upgrading and the remodel that you've been hoping to do, building an ADU on your property if you have extra space that's allocated, that the city would designate available for you to build a little granny flat or something like that. This is the time to do that. In an interest rate environment where we don't see them tapering off or going down anytime soon, it's honestly cheaper to borrow the money today than it will be tomorrow. And so if you have not yet done your cash out refinance and you have a ton of equity in your place, this might be the best time to do that. Regardless of which way it is that you need our guidance and support, please make sure you stay in touch with your loan officer. And if you're seeing us for the first time, make sure you reach out, leave us a direct message, drop a comment, or you can even send us an email. Tell us what it is you need help with in the market right now and how we can get you from where you're at to where you want to be. Also, make sure to share this video with someone you know, like, and trust who needs to know what's going on in the mortgage industry right now as it pertains to all the headlines and everything happening. We want to make sure that we help you and the people you love win in mortgage and real estate in 2022. Thank you so much for watching, and we will see you again next week.